So you may have heard your business has two kinds of profit. You have gross profit and you have net profit. So what the heck does that mean and why do you care? Well, gross profit is a calculation of your revenue minus your direct expenses. And when I say direct expenses, that's a particular kind of way that your business spends money, because every business spends money on things that are directly related to how they make revenue. If you're a granola maker, it's things like oats and honey and packaging materials. If you run a accounting firm like we do, it's often labor for those things. So the gross profit is the money that is left over after you spend your direct expenses. If you're looking on your income statement, it may be called cost of goods sold or cost of services. So if the business makes $10,000 in sales, our direct costs are $4,000, your gross profit is $6,000. Jason, what is net profit?
So net profit would be what the ending result of what you get to keep after all of your internal operating expenses. So if you think about not just the things that you need to spend money for to be able to deliver your product or service, but also thinking about your business insurance, thinking about any internal team development that you spend on, any marketing or advertising that you spend on, all of that internal operating expense that isn't related to the actual delivery of the services, they're still expenses to your company and they affect your profitability. Another way of thinking of it is after you've determined your gross profit, which is the profit that exists after the money that you spent to deliver those services or products, you would subtract out those internal operating expenses. Again, think rent, think software subscriptions, and the like. So, say that you had $6,000 gross profit, and then you spent an additional $4,000 on some internal items, then you'd have $2,000 left, and that's your overall net profit. So, Walter, tell me about why understanding the difference between those two things matter and why both of them are important.
Well, they're both important. The gross profit, if you're the business owner, the gross profit is really important because you and I get paid after gross profit. So in the example I used where there was 10,000 of revenue and 4,000 of direct expenses and we had 6,000 of gross profit, well, if we can improve our gross profit, say cut those $4,000 down to $3,000, then we found another $1,000 to do whatever we want with, including pay ourselves. So business owners, an improvement in gross profit margin really benefits the business owner because it creates more discretionary cash inside the business. Now, the net profit margin, also often called the bottom line, that's the number that is left over when everything is paid, not just the direct costs, the indirect costs, but every business needs to produce a profit. So you could have a very healthy gross profit number, but if you get to the end of the income statement and that number is negative and red, that's still not a good sign. That means the business model needs to adjust somehow. So Jason, how have we helped clients improve their margins?
Well, there are a few ways to go about tackling this. First, a lot of companies often look at pricing their products and services with a little bit of fear, but the reality is that the cost to go and deliver services or products will continue to increase. That's just the realities of inflation. And raising your prices strategically, steadily, and regularly over time is a business practice that we've helped clients understand and adopt to be able to improve their bottom line. Additionally, taking a look at your expense structure and finding unnecessary expenses to cut. We like going through an exercise called need to have and nice to have, and really evaluating what are the components that would trigger needing to cut a nice to have. And then usually as part of that process, we'll discover expenses that they didn't even know that they had and could be immediate cuts. Another way is figuring out operational efficiency. So, Walter, you mentioned being able to cut down your cost of services or your cost of goods sold from 4,000 to 3,000. You could do so by either finding ways to automate tasks so that you're spending less time on it, streamlining services. If you're a products-based organization, finding bulk or bulk pricing or other advantaged pricing options for your ingredients or components. And then just making sure that you are also tracking it regularly. What gets measured gets managed, and you want to make sure that you're keeping track of both gross profit and net profit. So knowing all of that, Walter, what would you recommend as advice for pitfalls to avoid?
Well, number one, don't confuse high revenue with high profits. Um, One is the number at the top of the income statement, and while high revenue is a great thing to celebrate, and increasing the gross sales is wonderful to celebrate. Not all high revenue businesses are profitable, so don't confuse revenue with profit. Um, Ignoring operational costs that eat into profit. So we find that a lot of times one of the easiest ways for operational costs to eat into profit is that they just go unexamined, and they get fatter over time when they're left alone. Lastly, I think is failing to track expenses accurately. So really understanding where the money is being spent, why it's being spent. This is one of the benefits of an annual budget process is getting your arms around where the company is spending money. Revenue is just the top line. There's a middle line, gross profit, and there's a bottom line, the net profit. All three of those numbers are important. They're all related to each other. And in our opinion, that middle number, the gross profit line, is often the most misunderstood for small business owners.
All right. So if you are ever curious about how your financials are working and want a greater explanation of what do each of those numbers mean within your organization, definitely check out the resources that we have available or feel free to shoot us a line. We love teaching clients and elevating their financial literacy so they could truly understand their revenue and their margins in ways that help them run their business.